Okay, so yeah, as I said in my intro, this is about real world assets and tokenization. So basically, tokenization is the means by which real world assets are put onto the blockchain. Um, yeah, so basically, tokenization is the mechanism of securing real world assets in the form of physical assets and also digital assets. So whereas what we've got now is basically you've got real world assets, property, stocks, businesses, um, whatever it may be, and by the way, products as well, all kinds of products. You could say is an asset, but they don't have to necessarily be assets even to go on the blockchain. Just even I think regular products will also be tokenized one day. Maybe they will be last. But so basically, what we have now is those assets are obviously the ownership, the title, the certificate, or whatever it is that proves your ownership is not held in a blockchain. It's held by very likely it's held by some third party in the form of investments. They'll be held by your broker, they'll be held by other companies. Just like your money is held by a bank. Real world assets are not, we don't necessarily have access to the proof of ownership, and we have counterparty risk when other people are holding them. If something happened to them, or if they got hacked, or if they went down, then basically you could potentially you could be in quite a lot of hot water, because you can have your details stolen. At the very least, you can have your identity stolen. They can know where you live. They know everything about you. Or you might have bad actors where you're holding your assets with other companies and they don't have your best interests at heart. And as the system that we're in starts getting more and more tenuous, anything could happen. Anything could happen, and there could actually be kind of a grand theft could actually be on the cards. So there is a real use for this to put the assets on the blockchain. And then once they're tokenized, then that gives you proof of ownership. It also gives you the ability to get other benefits as well, which I'm going to go through. So yeah, so we'll start getting into it. So real world assets in crypto vernacular, in crypto speak language, they're often referred to as RWAs. Everything seems to get broken down into acronyms in this space, just for ease of, I guess, speak. But you've got to learn these things. There is a language involved with crypto that sometimes can be quite confusing. So RWAs, if you see that term, it means real world assets. So real world assets, also called RWAs, are tokens that represent certain physical assets. It can be as property, objects, bonds, or others. Basically anything that's physical, pretty much, that has a value, and non-physical as well. As I say, the more and more that we get into this digital age, there will be digital assets, of which our crypto is one. And yeah, there's going to be all sorts of other things, digital services as well. So just like other tokens, these function on the blockchain through a smart contract, and one token can amount to a whole object as well as its part. So that is a big divergence also from what we've got now, which we will analyze that statement as we go along. Real world assets are arguably the biggest use case of blockchain and crypto. I would say it's not even really arguable. It's so big. It's in the hundreds of trillions. It's so big it dwarfs even global payments. It dwarfs gaming and other applications. But the thing is with this also is that there's going to be a lot of overlapping. And as one area grows, like say real world asset tokenization, it's going to foster growth in other areas of blockchain and vice versa. As global payments become bigger or gaming becomes bigger, then that's going to foster growth in other areas like real world asset tokenization. So everything's feeding off each other. There's going to come a time where this network effect is going to get where acceleration of development and the rolling out of the applications, it's where the applications are where they come into our reality. That's the user interface. That's where we're going to start seeing massive acceleration in applications. So, so tokenization is the act of putting RWAs on chain. Often they shorten it to, when they say put on chain, they obviously mean on the blockchain, but they just shorten it to on chain. So we're seeing that with like even fiat money now is being tokenized. That is a perfect example of tokenization, is fiat money. So it begs the question, why tokenize real assets? I kind of already kind of touched on it, but we're going to go into it a bit more. It enables fractional ownership of assets, normally out of the reach of common people. So we will have the ability in the future to own a fraction of a house. Say you might have a group of friends or your family, and you tokenize the house and everyone has a share in it. So normally now, you know, one party, one person, or one say trust, whatever, will own a house. Whereas now legally you can break it up so that everybody can have a viable share of that piece of real estate. It will also apply to virtually everything else. It doesn't just have to be property. We have fractional ownership of anything. The benefits of the blockchain protocols and its network effects are translated to the assets. So what that basically means that the benefits of why we have blockchain, which is permissionless, we don't need permission to enter. The immutability, spelt that one wrong, it's supposed to be with an I, immutability and trust as a trusted system, those benefits are put into the protocol on the blockchain. It means, and then the same benefits go up the stack or up the vertically integrated to all the way up to the application. So if you're tokenizing an asset, you get the benefits of how that blockchain has been programmed. They're not separate. They're kind of all entwined. So this is where we had to do the research on the nature of the blockchain. What blockchain are they building on? What are its how is it coded? What are its protocols? And that's where our education knowledge comes in, because not every blockchain is created equal. Not every blockchain is going to be fully decentralized. Others will be more centralized. Doesn't mean that they won't have an awesome use case. Depends on how it's centralized, like who's in charge and that sort of thing. But definitely, whatever happens, whatever's happening in the basement, in this case the blockchain, it's going to translate or will be represented in the first floor, which is kind of where the tokens appear. It will be super easy and cheap to buy, sell, and transfer assets globally. So that means like someone say here in New Zealand or Africa or Latin America or wherever you are in the world could literally buy a property or a stock or a bond or a fraction of anywhere in the world. And then when they decide they want to sell it, they could sell it anywhere in the world. And it will be very easy to market because there is going to be a huge community based online in the blockchain. And it will be as easy as putting it in a marketplace. And the marketplaces are springing up all over the place. So it's just like today where we go on the internet and we surf the web, we surf different websites. We will be going into dedicated blockchain websites, and we will be doing the same thing as we do now, except we will be surfing in the blockchain and looking for what we want to buy, what we want to sell, whatever it is we want, or decentralized social media, whatever it is. So it's basically going to be much the same, but the results are quite different. There'll be no middlemen in theory. So that's assuming that it is really fully decentralized. There'll be no middleman between those transactions. It's going to give massive upside to our crypto, especially the crypto that you're holding that is developing tokenization systems. So we want to look towards those crypto that are building platforms for tokenization. Tokenization means secure ownership on the blockchain of your assets and a much greater access to real world data that affects that asset. That's a really, really important thing. So what it means is, like, say, instead of just, you got access to your asset, it's on the blockchain, but you're going to get all this data around it. Like, say, if it's property, you can get the data on the latest sales in your area. What is the average price that it's selling for? Number of sales. All the data that you would normally need when you're, say, buying or selling anything, when you're doing your research. The beauty is the blockchain can throw all that up as well as the actual asset itself. And one area where the data and tokenization is going to be huge is on the Flare network. I believe Flare is their Flare protocol and their data protocols. They are very superior. So that's the data with the asset is super important. That's going to give people much better informed decision whenever they're buying or selling or whatever they're transacting. So how does it work? So basically, these crypto firms, these fintechs, they call them, that are building on chain, they're going to be the new businesses of the future. I believe that, every business that's now, you could say, is effectively off chain, they're all going on chain. But there's a whole raft of new companies that are building on the blockchain that are going to compete really, really heavily with the existing businesses. And because of the nature, the permissionless aspect of the blockchain, that means that by holding the crypto or the token, we're holding a digital share in that company. And we are having a bit of an educated bet on that business is going to do well. So that's why I've been watching this space for a long time. I've seen a lot of businesses come and go, new projects that issued a token. They didn't last long. There's a few that lasted longer and then eventually got swallowed up. Some of them have merged with bigger projects. But the ones that are building today, that have been long-term building, and you can tell when you're with your research when they're looking really, really strong. You don't have to be, it becomes apparent after doing a certain amount of research which projects are standing out. So, yeah, we get to, instead of having to go through a broker in the old world, when big tech started, when the dot-com boom hit, we never had a chance to invest in those businesses. We were locked out because we weren't considered savvy enough. We're not an accredited investor. You have to have a certain amount of wealth to invest on the early startups of the whole internet, or whatever it is, any startup. We weren't invited. It was for the private equity people, the venture capitalists, and the accredited investors. Now that's all changed, and people are voting with their money left, right, and center, and starting to buy up these tokens in anticipation. There's still a bit of speculation going on there, but if you're buying real quality tokens, a lot of the gamble has been taken out. At the very least, you're not going to lose your money. I don't think you're going to lose your money if you're really doing proper research. But of course, not everything goes to plan. That's why we always say, don't invest more than you can afford to lose. So so you can tokenize a fund, like you could tokenize an investment fund, you can tokenize an actual business, and it means you get your dividend paid automatically and instantly upon the smart contract deployment. So when the payout time is set, you just get it automatically into your crypto wallet. And this is what we can do now. When people are forming their own funds, they're not being formed by Wall Street, they're being driven by people. And it's happening all over the place. And one such fund that I have referred to, I have presented on, it's called Commonwealth. And I think they're going to be quite a player. And there's plenty of others springing up. I'm in a group called Six Society, which has a tokenizing fund in there, which we can invest in. And there's going to be stacks of them. But again, this is where if everyone's charging in, they can't all survive. So we have to be very cautious. So basically, tokenization can be applied to all businesses, all assets, services, investments, and basically anything, like I've really discussed. Even products in a retail store ultimately could be tokenized. It will save heaps in human time. It will minimize human errors. because we're moving to a more collateral-based system, it's going to be a much more open, transparent system on the blockchain. Everything's going to be super more efficient and very effective and very fast and low cost. So it is going to mean a streamlining of businesses. There's going to be there will be streamlining of businesses. There will be loss of jobs, but I believe they will get people will be forced to upskill, and they'll have to make themselves re-employable in other areas. It's just the way it's always been throughout the ages. There's always been major resets to the economy every 50 or 80 years or so. We're just in another one of those times. So it's going to be crazy. It's going to be hard. It's going to be difficult, but it's all very doable. And when the push comes to shove, I'm sure we will find a way. Humans are pretty good at that. So it's going to make it easy to back crypto tokens with real assets. Tokenization means that, yeah, it's going to be kind of a seamless thing where with the token you're holding, if it's tokenizing real world assets, then the asset itself then becomes the collateral for the token. So it's kind of the two go together like hand in glove. It's going to be, and we're going to see this with things like gold, lots of assets, obviously property, gold, tokenization of gold is happening very rapidly. More and more companies are getting in on that. And speaking of that, and the applications of, there's quite a list here. I'm sure there's plenty more. I could go on and on, but you'll get the gist. So basically, real estate, we mentioned, investment funds, private equity. Private equity is normally being the reserve of the accredited investors. Again, we're going to get the opportunity to be putting in our equity. It'll be like public equity, not private equity. So that's going to be quite different. And venture capital funds. So basically the funding of startups, which is what everything on the blockchain basically is. They're all startups. It's a brand new asset class. Fiat currency that is being tokenized in the form of a stable coin. That's what a stable coin is. Also, you could say a CBDC is a tokenization of fiat as well. Slightly different nature. It's obviously completely centralized. Whereas stablecoins, they're not actually much different really, except the issuer may not be the central bank. It may be just a commercial bank or a retail bank. But it's going to be very similar. We have to see what measures they're going to apply to it, and if there's going to be tracking and tracing. I think they're going to have a huge pushback on that, and I don't see that doing so well. If they're going to make their currency with all this tracking and tracing, with all the other options we've got, and in crypto and decentralized crypto, and there'll be other stable coins that don't have those. People will just go for those. Because we're talking global currency here, it could be created in any country and then spread around the globe. So if some countries have been really, really strict and draconian, we'll find another jurisdiction that we can adopt their stable coin. I'm talking mainly about stable coins and CBDCs, but also, crypto in general, is going to be global. And they are adopting some of them in the big with the big boys, the banking tokens, the ISO tokens. These are all going to be greenlit, I believe. Debt, they're actually tokenizing debt. I mean, we're in a debt-based system. I'm not in any way suggesting or promoting a debt-based system because it's not, it's obviously not doing too well and the debt is just ridiculous. But that's what they want to do. They're tokenizing the debt. They're putting the debt on the blockchain. Same with bonds. Bonds are how money comes into existence, which creates the debt. They call it the capital markets. It actually underpins our whole system, which is one big reason why it's in major dire straits right now. Is anything that is purely based on debt. You don't have to be a genius to know eventually that the debt's going to get so big that it's going to be unsustainable. And the thing is, with a debt market, with a debt-based market, that's why they've got to continually keep creating and printing money in order to enable it to not freeze up and seize up. And so obviously the seeds of its own destruction are already sown into the system. This is why we're needing a reset. The insurance industry is going to be very much overhauled by tokenization and crypto blockchain. It's going to make it much more transparent. The insurance industry is an enormous industry and it is really rife with fraud. I actually used to work with the second largest I've actually worked with two large insurance companies in my corporate days, and my God, the amount of corruption involved there is credible. I used to work for Legal and General. They are a behemoth in the insurance industry, and yeah, what I saw, you can just imagine. It was just like in banking. It's very like banking, but more elitist and a lot of corruption. So yeah, the insurance industry needs an overhaul. It's going to be a real revolution there. Cars, boats, planes, bikes, motorbikes, even push bikes, they could all be tokenized. Probably all these electric bikes and electric scooters, they'll probably all be tokenized. Businesses itself, just the actual business can be tokenized and it can be made into a DAO, a decentralized autonomous organization. It can issue its own tokens, like its own shares. And if the community want to buy them, they can. And then the business can give them extra benefits and rewards. Thinking of doing it myself one day. So there's a whole heap of options there. Shares, the traditional shares that we've got now on the share market, they're going to be tokenized as well eventually. They call them equities, also called equities. They are very much looking at that, and they're doing pilot programs for tokenization right throughout the existing market now. This blockchain's really caught the imagination of the existing system. They've really woken up to it now. They know that they have to do something because the development is forcing their hand. And as I listened to one guy recently, a developer, he says, what we've got to do is we just got to develop like crazy, get really, really good platforms out there as fast as possible, get people enrolled. And the more we do that before the government really wake up, then they got a hell of a job trying to stop it. They're not going to be able to stop it. They're only going to be able to try and, they can only do what they can around the edges. They can't stop the technology, and they're going to have a hell of a job trying to regulate it, to their design. So his idea was, and he was saying it is happening. There's thousands and thousands of developers creating technology that's all in opposition to the central system. And as the saying goes, there's a lot more of us than them. So eventually their system's going to snap. It's going to break. The tide has turned. I think the tide has turned already. there's going to be a massive surge in that tide towards people development, bottom-up development, people-based development. Gold and other precious metals, silver, platinum, palladium, copper, all of these are traded on the global market. They can all easily be tokenized, put on the blockchain. And then that's going to eliminate so much manipulation. There's so much manipulation in the gold and silver market with their paper contracts. The paper, well, the paper relates to a certificate where people buy. It's like an ETF. It is an ETF, just like what they're doing with Bitcoin. That's why I recommend everyone stay away from the ETFs. Just make sure you hold the actual crypto itself. Don't need a piece of paper. See, when that crashes, those who are holding the paper are going to lose their money. But if everything was put on the blockchain, they wouldn't be able to manipulate it like they do. How do they do it? They basically just buy and sell these paper contracts amongst themselves. The big banks have got agreements that they'll buy huge amounts through the paper, and then they will sell it when they want to sell it to somebody else. And it's like it's like pass the parcel. It's just crazy. They're in their own sort of circular economy. We've got to eliminate all that. Should be buying the physical gold only, or the physical silver. It's all tracked and traced. You know that you actually hold it. If you want to hold it in a vault, the blockchain can help secure that. There'll be times where you won't need to hold it at your home, because the blockchain is going to be far more secure at protecting your right to your gold or silver, whatever it is. There'll be all sorts of community initiatives. You could tokenize, like a community could come together and they could create something on the blockchain, sports clubs and all that. They could issue a token, and then it's like instead of having just a pure membership database or whatever, people could issue the tokens, and then you get benefits, or you could have community gardens or community swap meets or markets and stuff, and then you could swap the tokens kind of like a barter. And eventually I think all products eventually will go on the chain. That might take 10 years before you get everything on there, but that means a long tail of development, and therefore a long run in the price. Some examples of crypto token projects that are specifically focused on tokenizing are Ondo. There's a project called Ondo. There's one called Pendle. Price is going crazy on these. Pendle particularly. XDC is a huge token. It's one of the ISO tokens. They're not just doing tokenization, they're also doing trade finance, payroll. That is going to be a big project. It's XDC. XLM, the Stellar Foundation. XRP, again, not just in global payments, they're big in tokenization as well. Proppy is a specific real estate project that's going on the blockchain. Nexera, they're big into tokenization. LCX is another one. It's also an exchange, and I believe you'll be able to buy and sell security tokens, digital securities, as well as currencies. And they are tokenizing and then using the exchange to hold, to trade the actual tokens. So they're creating like a marketplace. Chainlink is going to be a monster in this space, because they aren't just tokenizing, they're creating a lot of the infrastructure so that companies can do the tokenizing. So that is like huge. chain linker into all sorts of incredible things. And they are facilitating, they're building the foundation for tokenization to even happen in the first place. So this is an example where if you buy and hold the link token, the chain link token, it's called link, then you're literally got a shareholding in the development of the new internet, the new blockchain-based internet. Now, to get more analysis on all of this, CoinGecko.com is great for looking at different categories. You go to the categories section, you look at all the different categories there, you'll find real world assets in there, along with all the other things. And then you can go down and look at all the tokens and look at, get their details. Remember, once you go on this website, it's a website portal into every website of every token that's listed there. So it's a really, really good resource for you to use. I was just we're going to briefly look at this article. It's talking about the development of tokenization. So just bear with me. I'll just so what they're saying, CoinDesk is a big media outlet for crypto. And what they're saying, 2024 will be the year tokenization truly and finally begins. So that's a pretty big statement, but that's what they are saying, because there's been a lot of development going on for a long time. While people are busy going about their business, they don't realize that there's a heck of a lot been going on behind the scenes for years and years and years in this space. And they're saying here, after several years of being the next big thing, next year will be, so this was written in 2023, next year will be when tokenization of real world assets really takes off, says Colin Butler, global head of institutional capital at Polygon Labs. Polygon is a project that has a crypto called Matic. It's a layer 2 on Ethereum. It's built upon the Ethereum blockchain, that means. And so that's a very interesting statement. This was written on November 30th, 2023. And I say here, he says here, everyone from TradFi means traditional finance, it's a short for, TradFi leaders to the crypto I'm not sure what that means. Cognoscenti predicts. I don't know. I've never seen that word before. That's unusual. But it predicts that the tokenization opportunity runs to the tens of trillions. Some people say it's hundreds of trillions. But even if it's tens of trillions, I mean, that's eye-watering. How big is that? It's huge. So while we've already seen some compelling use cases, these are a drop in the ocean compared to the flood of digitized assets that could move on chain in the next few years. When will today's trickle of tokenization turn into a torrent, and what is holding it back? This October, Forbes published a deep dive into the issue under the provocative headline, Why Tokenization is Failing. Forbes are heavily involved with the existing establishment, the matrix, whatever Forbes say, they're obviously just trying to slow it down. They're not involved in wanting to promote this space. So, of course, they're saying tokenization is failing. The author, director of digital assets research, Stephen Ehrlich, provides a litany of failed or underwhelming digitization projects and concludes that the issue hindering adoption isn't technology, but trust. So this guy begs to differ. He says the primary reason that the tokenization market isn't in full flood is technical bottlenecks, limitations around current infrastructure, and interoperability. And from what I've seen, I totally agree. Also, a bit of a regulation, the holdback from the regulation space and the politicians. An inevitable fact is a young, nascent space. The last year, however, has seen incredible progress towards overcoming these issues. While it's easy to showcase the projects that didn't deliver, the true story of tokenization in 2023 is about the groundwork being laid that will enable the next wave of tangible on-chain results, driven by the might of mighty financial players entering the market, not least of which BlackRock has come out. Larry Fink said, we believe tokenization is the next big thing. He said it. He said it a couple of different ways and a couple of different times. So he says here that private equity funds and credit are leading the charge. Speak to anyone intimately acquainted with the tokenization ecosystem, and they'll tell you that 2024 is full of immense promise. For starters, we see intense interest from private equity funds looking to develop new tokenization vehicles for their investors, even further putting these ideas into production with haste. This trend is set to continue into the new year as TradFi titans, including Hamilton Lane and JP Morgan, develop tokenized funds. You're never going to stop the big boys from getting involved in this, but what they're doing is they're just helping to grow the space so massively that they are literally, in many ways, you could say, they are pumping our bags, where normally it's us pumping their bags. Normally they get in first, they develop an asset class, it's totally secret, and then they launch it out. And then they put their financial advisors go out and sell the products. In this case, with blockchain, it's complete reverse. It's been completely driven by people. People have front run it. People are developing it outside of them. And these big boys are coming in later to the party, and they are adopting it, but they're not creating the technology. And that's the big difference. So really, it's going to be a win-win. And look, when some of this technology really lands, it's going to make such big changes at the top that traditional finance will never be the same again. There will be an evolution of slow but sure redistribution of money and resources away from them, I believe, this is my opinion, and into the hands of more and more people, particularly in third world countries, impoverished countries, and in the hands of other people like ourselves who are looking into it and are not only are we buying the cryptos, but now starting to look to adopt the technology as well. So so basically back to the article, he talks about there's an inevitable expansion into other assets. These instruments are just the start, though. The next generation of tokenized assets will include offerings like bonds and equities. In time, real-world assets such as art and automobiles, commodities, fine wines will be traded on-chain. In fact, it's already happening with use cases like fractional ownership of classic artworks. Tokenized real estate in particular could be a significant boon for the market, which has traditionally been complex and slow moving. Now, not only will these markets become digitally native, but they will also benefit from things like fractional ownership and near instant settlement as well. This stands to make investing more accessible and bring new liquidity into sclerotic markets. Entirely new generations of investors will begin to tap into the possibilities of tokenization and breathe new life into legacy markets. With new institutions and assets will come new payment rails, as well as the requirement for industry-wide standards to make all of these products and markets interoperable. The interoperability is a very important piece because that's what's going to make it an entire seamless global ecosystem, which we'll be able to dip in and out of too. You know, we don't have to, we can sort of move around from blockchain to blockchain, or we can stay confined to one blockchain. Just one blockchain in itself is an ecosystem. When you join all those other ecosystems up, then you've got one huge giant ecosystem, and everything's going to be connected. So not only will this demonstrate the power and utility of tokenization, but it will also foster the trust that Forbes correctly identifies as the key driver of demand. And actually trust, when you talk about trust, there's no trust left in the existing system. There's no trust in banks or financial institutions. So when he talks about trust, he's talking about their own selves. He's talking about there's no trust in the blockchain. That's from the boys at the top, because they don't trust it because it's upsetting and disrupting their existing business model. The trust is with us, the people, and it is with the actual blockchain can be trusted, and that's what scares them. So I think he is projecting his own fears into that article. In 2024, we can have every confidence that the flow of new tokenization will turn from a drip into a deluge, marking the most profound revolution in financial affairs for centuries. So that's pretty huge statement. Now, one thing I'm going to do is I'm going to finish off with one little video clip that I had. Just got to find it. What do I do with it? Bear with me for a sec. Looks like I've overwritten it. So this is how we'll close out, by listening to this video. Doesn't seem to want to play. Okay, I'll see if I can watch this one. It wasn't quite as good. The other guy was quite a lot clearer, but we'll see if we can watch this one from Bloomberg.
Let's start with that news. DTCC, you have a new arrangement with them, a new relationship. Explain it to us.
By the way, too, this is the CEO of Chainlink. So just thought I'd let you know that.
Yeah, sure. So we've been working with them for some time now on how to create high quality on-chain digital assets that are driven by data. And so the report that's just come out today shows how data can flow into assets on chain and prove critical things about the assets on an ongoing basis, which is very different from how the current financial system works, where the ownership of an asset doesn't give you access to data. That becomes your responsibility. So the DTCC report was around something called SmartNav, where Chainlink was used to put critical pieces of data on chain around funds, tokenized funds. And the collaboration included big firms like JP Morgan, Franklin Templeton, BNY Mellon, State Street, and others were part of the pilot with them. And I think what this shows is that real world asset tokenization is taking a more mainstream institutional interest level, especially the real world assets that are backed by data. Because the big difference here is that the asset can have critical information about it continually updated. And the holder of the asset or the buyer of the asset doesn't have to search for that data, and they don't need to have any special expertise. And also the data can move across chains. That was the other big part of the collaboration, is how does the data and the asset end up moving across chains. But this is just some of our initial work together, and I'm hopeful there will be more with them and other large CSDs.
It's interesting, of course, because there are many vocal critics of some of the actual coins and investment opportunities when it comes to crypto, but they've always all together now said, but we like the underlying technology. We like blockchain. CEO Jamie Dimon, for example, of JP Morgan. How does this disintermediate longer term financial institutions?
I think financial institutions have a fundamental role to play in terms of compliance and in terms of allowing users to use digital asset products in a compliant way in relation to their identity, in relation to ways that regulators and CSDs and central banks find acceptable. So I don't think banks are going away. I don't think things like the DTCC are going away. I don't think central banks are going away. I think they're going to use the technology. I think they'll actually be the biggest net users of blockchain technology, and they're going to generate the most assets. They're going to generate the most payments. And importantly, they're going to do it in a way that complies with legal requirements. We're kind of at a place in the crypto industry where if you're at 2.5 trillion, maybe you can go to as high as 10 trillion off of hedge funds and prop traders in the retail community. But in my opinion, if you want to go to the hundreds of trillions that will be in the blockchain format, you need the global CSDs, the central banks, the big commercial banks to basically adopt the technology for its value.
Yeah.
And that's what this collaboration with the DTCC has been about, is providing that technical value in ways that benefits both the traditional financial system and consumers and the Web3 blockchain community.
This is about, you say, accelerating the investment fund tokenization movement. Which particular real world assets are we ultimately going to see being put forward on the blockchain first? It's already being done, already being experimented with. But for the audience out there who also happen to be trading equities or in the commodities space, maybe they're a bond syndicate desk, where are they going to see their assets hit first?
So it's actually going to vary by institution and what institutions are good at tokenizing or good at turning into securities. There are basically two categories. There are the core financial products of the current financial system: treasuries, money market funds, bonds. These are being tokenized by bigger institutions, and the benefits of tokenizing them are around collateral management, and they're around diversifying your on-chain holdings so that you're not just holding cryptocurrencies on-chain, you're holding treasuries on-chain. Then you have what are called assets at the edges. These are assets that have traditionally not been tokenized. So these are assets like carbon credits, real estate, private equity. These are the assets that have not been securitized that are now being securitized in the form of a tokenized product. These are the things that people have more press releases about, they hear more about, because they're a more exciting kind of net new product. And I think that there is tens of trillions of dollars in value just in the net new product category. but I am actually seeing both of them happening at the same time. I'm seeing the tokenization of treasuries and money markets and more foundational financial products and very foundational parts of the financial system. And then I'm also seeing the more advanced kind of securitization 2.0 wave of tokenized products. The ones that come to mind are private equity,
Right.
real estate, and carbon credits.
Right, so that's him. He's obviously
I've kind of been following De Beers for years now, but I feel like the whole picture is hard to really
well,
see. Who controls the global
Uh,
diamond market?
So De Beers used to. So back in the
Oh,
80s
sure,
and 90s, they had
that's
80 to
fine.
85% market share.
stop that.
I sent
So yeah, so he's talking to Bloomberg. They're fairly established, they're pretty much a cabal media outlet, and so I think he's just talking to them at that level of central banks and all that. I've heard him talk I've heard him talk to other audiences where he's had a completely different tune, and he's talked about the decentralization and all that. But they are working at both ends. Someone like Chainlink, their tech is in demand, and they are really working at the highest level, and are also working, I believe, to help people at the very down near the bottom. But you can see that everything is going to change from the top to the bottom and bottom to the top. And so that's obviously going to create a lot of disruption. But at the end of the day, I think when the dust settles, we're going to have a lot more transparent and a lot more fairer, safer system. I don't know how long it's going to take to get that, but hopefully not before the end of our time. Hopefully it is before we exit this earth, that we get to see a better world. So with all of that, I think that's basically all I've got to